Hello again. Thank you so much for watching. Today we're going to be discussing LTV, what that means and how it pertains to you as a commercial loan broker. Before we get started, if you please hit the subscribe button if you already haven't, as well as hit that notification bell. It really helps us get the word out there. And then also, if you are a commercial loan broker and you haven't checked out our Patreon, it's definitely worthwhile. A lot of our brokers take a lot of value from this. We got exclusive content that you normally don't see anywhere else in our platform. Well, let's get into it. So the term LTV stands for loan to value. So it's a very simple term. It's used throughout the lending industry, especially specific to real estate. Now, just to jump into it, in essence, the loan to value is a percentage of the value or purchase price a lender is willing to go up to. So basically, it's just how much a lender is willing to lend up to a certain value purchase price, right? I just reiterated it. Now, the LTV equation is very simple. It's the loan amount divided by the value of the property. So very easy. The loan amount divided by the value of the property. Now, lenders are always going to have their maximum LTVs. And so what we're going to do is we're going to jump into a scenario of a borrower's request of what they're looking for. And then we're going to line that up with what a lender is most likely to actually give them based on their LTV maximum. So let's jump into it right now. So here we go. Let's just start off with the borrower's request, because this is typically what we see first in our loan to value scenario. So let's just say there's a borrower. He's looking to purchase a property. The purchase price is $200,000. Now, the borrower has $25,000 for a down payment. They tell you, hey, man, I got $25,000 to put into this. So if we do the math here, that would come out to a $175,000 loan request. So borrower saying, hey, I can get it done with $25,000. I need $175,000 to buy this property. Now let's just figure out, how to determine the loan to value this borrower is looking for. So what we're going to do is we're going to take the loan request, which is $175,000, and we're going to divide it by the purchase price, which is $200,000. So I just got those numbers over here on the right, 175 divided by 200,000, and that's going to give us a final LTV of 87.5%. So what this is saying is the borrower is willing to put in 25,000, which is going to bring the loan amount to 87.5%. So whatever the difference is to get up to that 100% number, that's how much the borrower is actually putting in here. So in this case, what is it? It's 12.5%. The borrower is saying, hey, I'm willing to put 12.5% into this deal. Now let's get into the lender guidelines. So just remember that number, 87.5%. That's what the borrower is requesting. Now let's look at what a lender would typically say, hey, this is where our maximum is. This is where we land. So typically a lender is going to say, hey, based on your experience, let's just say a lender will say, hey, based on your experience, we will give you 85% loan to value. This is the maximum we're willing to give to a borrower such as yourself. So to determine the total loan amount here, it's very simple. What we're going to do is we're going to look at the purchase price of the property, and we're going to multiply it by the loan to value that the lender is willing to give. So let's just jump into that. So the total loan amount that the lender is going to be willing to give is going to look like this. We're going to take the purchase price that the borrower stated, so $200,000, and we're going to multiply it by the percentage LTV that the lender is willing to extend. So I'll just visualize it here on the right-hand side. So let's take a look, $200,000, and we'll multiply that by the percentage that the lender is willing to give. So whenever you do these types of equations, you always want to go 0.85. That will equal your percentage. So if we punch that number out, we find that the final total loan amount that the lender is willing to give is $170,000. So let's just look at the next. Let's just look at the conclusion of the matter. The borrower's looking for 87%. The lender's willing to lend up to 85%. So let's conclude here. Obviously, the borrower is requesting too much. The borrower is requesting $175,000 loan amount, or in this case, 87.5%, while the lender's only willing to lend up to 85% of the loan, or 85% of the purchase price, or $170,000 loan amount. Now, the good news is we're not too far off. The borrower only needs to come in with an additional 5,000. And so, this is actually a prime, this is a type of scenario that comes up a lot. Borrowers ask for either way more than they qualify for, or just a little bit more than they qualify for. So in this case, we didn't lose the deal by any means. In this case, you're most likely going to be able to get that borrower to pull in an extra 5,000, whether that's money that's just stored underneath their bed or from a friend or an investor willing to help them out. So this is just a typical scenario. Yeah, I mean, if you have any questions, feel free to reach out. Thank you so much. And if you haven't already, again, please hit that subscribe button and the notification bell. It helps us a lot on those algorithms. And if you haven't already checked it out, we have our Patreon here. If you learned a lot here, you definitely want to check out our Patreon, which has a lot of exclusive content. Thank you so much for watching, and we'll see you soon.